This is the preview for the week of January 11th to January 15th, which actually begins on January 10th or 9th over the weekend when markets are closed. We have inflation numbers from China. Why am I talking about this? Because China moves markets a lot. So we have to watch out if you're trading on early on Sunday. It's sort of late on Sunday here in the old continent. Just as the week begins, this will have the biggest impact on the open. If we have better than expected or worse than expected figures, then this will have an impact on Monday, because on Monday we don't have anything really important. On Tuesday we get more interesting stuff: UK industrial output and US jobs. It's another jobs measure. Things become more interesting on Wednesday. Yet again, look at the events I'm highlighting. It's the Chinese trade balance. Not only the balance itself, but the level of imports and exports, which means the general level of activity. More activity, better for the world, better atmosphere. Less activity, worse for the world. And also on Wednesday, another non-economic indicator, if you wish, not a direct one: oil inventories. We've seen how this week we had a fall in crude, but a rise in distillates, and that sent sort of oil prices way down. To the more fundamental fundies, we have on Thursday the Australian jobs report for those of you trading the Aussie, and a rate decision in the UK. No changes expected in the interest rates nor the QE program as usual, but the meeting minutes are released at the same time. We could have an indication if we'll have less chance of rate hike, as we've heard recently from the Bank of England, or her chance. So far we had 8 members voting against the change, including Governor Carney, and just 1 member, Ian McCafferty, voting for hike. Let's see if we'll now have a unanimous 9-0, or we'll have the same voting pattern. That could be a very, very significant event for the pound. Okay, and on Friday, the focus returns to the United States. Retail sales for December with the PPI at the same time. Let's see how the US consumers spent or not so much in December. We have also industrial output to see the fragile manufacturing sector in the United States. And last but not least, the preliminary University of Michigan's US consumer confidence for this month, for the month of January. So we can also have an indication on spending. As we talked in the outlook, the US consumer was expected and still is expected to spend more because of low gasoline prices, but this doesn't really happen. Let's see if now they're more confident, or they spent more in December and are more confident about January. Okay, so I guess that concludes the show for today. As